Is my screen visible? Okay. Start
Yes,
the, we start the today's market talk. While valuations are not priced for the risk that could materialize, and this is in reference to the uncertainties which are ahead of us. It is actually premature to call a peak to interest rates in the US and all those issues. And US Treasury yields can spike higher due to all this global wars and issues in Gaza. Nifty, if you saw, lost 1,000 points in 7 trading sessions, and the speed of the fall is the one which took the investors by surprise. Everybody was very, very bullish. The fall took place because it became clear that battle zone will not be restricted to Gaza. So the stocks corrected, bonds corrected, but the gold prices shot up. And if you see, FPIs have withdrawn roughly 26,000 crore in October and are short on derivatives. And they are roughly around 10% long short is their ratio. So markets plunged sharply this week across the world. The latest correction is being led primarily by global uncertainty. US GDP growth for July September came at 4.9%, accelerating from 2.1%, which was last quarter. But despite a strong GDP growth, the bond yields fell, the stocks also fell, and the dollar index also fell. So actually, US data reflects a robust economy and possibility of a rate cut maybe by next year June before the elections and all that. But despite that, bonds and equity yields went down, and the markets corrected. So it's not adding up. Military spending will remain strong in the world beset with uncertain geopolitics. So the fastest growing sector among US GDP is their defense spending, and now it is going to move up further because they're going to supply arms to both sides. In this time, the retail outflows have led to the correction in this fall because the retail panicked and started selling their position. Because if you see the FI and DI's data just evens out. So this kind of fall is basically was because of retail and HNIs uh, closing their positions. Now, in times of uncertainty, it is better now to have good risk management policies, including thoughtful position sizing and disciplined stop losses. Now, steel demand in 2023 is forecasted to increase by 8.6% and 7.7% in 2024 for India. So, till now, the world steel demand depended on how strong is China's stimulus. China has been taking calibrated stimulus measures to avoid an overheated real estate market. India's steel demand is expected to sustain due to capital expenditure by the government, revival in construction and real estate, and increase in auto sales. Please keep the steel stocks in. Higher volumes and plant load factor are driving the strong growth in power generation for JSW Energy. Operating income growth was around 36% year on year. EBITDA growth was around 111%. Margins are up at 57.7%. Net profit up 82% year on year. They are adding renewable energy, thermal capacity, hydro capacity to their portfolio. FY25 EPS is expected to be between 15 and 16, and you give it a because of the growth, you give it a PE of 30. It could easily trade at around 450 to 480. It is somewhere around 380 right now. The point here is that you compare the results of NTPC to JSW Energy. NTPC hasn't shown any revenue growth this quarter. So these guys are having strong growth. So and because of the requirement of power and other issues, demand recovery, rich product mix, softening of raw material prices helped top line and margins for BLW. Sona BLW showed a strong order book. Revenue grew 20% year on year. EBITDA grew around 34%, net profit 34%. Revenue from battery driven electric vehicle segment grew 58%. Margins improved due to better product mix, operating leverage, and lower raw material cost. Order book is roughly 22,000 crore, 8 times their FY23 revenue, and EVs are nowadays contributing 78% of the order book. FY25 EPS is expected to be around 13. It is expensive, but still it is today trading at around 40 times. So it can still be looked at because it has consolidated for a long time in this 500 to 550 range. Now, another interesting stock is Nestle. It is building capacity. They are doing capex to sustain double-digit growth. Why I'm mentioning this is that this is the only among the big FMCG which is showing some growth. Balance are just flat. So Nestle will gain from shift from unbranded to branded segment in food and beverages. Double-digit sales growth, volume growth in the current year is around 2 to 3%. They have improved their distribution infra and are targeting rural areas. Now let's see some technicals. So this is US 10-year yield weekly chart. You see, they went to around 5 and have now corrected a bit, but this is can be because of technicals because a lot of people who were short on bonds have covered their positions. So now, in case there is some more negative news or more rate tightening and more demand and supply problem, the yield can still keep going up. The Brent crude has been very unstable, volatile. So it is stuck in this 90 odd range, and it can shoot. It went up to 94, 95, but it corrected because the conflict didn't escalate. But any day it can go up because the conflict in Gaza can go up anytime in case other players get involved. Gold is the basic hedge against uncertainty, and it has broken the declining trend line, and now it has crossed 2000, and it is headed to its that all-time high of around 2080 dollars to an ounce. Dollar index again, it is strong. It is at around 106 level. It is above the 20 EMA, and it is not correcting, and it has a steady rise from June, July onwards. And the actually the if you see from March, April onwards, the dollar index corrected, and this was the main reason for the rally in emerging markets. But after the dollar index has started rising, the rally has stopped going ahead. S&P 500, which is the broader markets of the US, now it is clearly below its 200-day moving average, and it is trending lower, and it is likely to head to this 3,800 levels. So the prognosis is poor. So it has to cross this 4,200 level for any strength. Right now, the trend line is pointing downwards, and the chances of recovery are poor. And the results are also all over the place in the US. India's 10-year yield is up, is was up at 7.3. So if the bond yields are higher, then interest rates also remain higher, and then it's up. The equities are not able to perform at those levels. USD INR dipped during the week, took support at 50 EMA at around 83, but has clawed back again because of the strength of US dollar and weakness and rise in prices and uncertainties and other issues and a lot of other or money moving into the US dollar, which is the strongest asset in the world. So it has reached around 83.2. Now, talking about Nifty, you see, we this is weekly chart. Now we had a big red candle, and it broke through that 19,000 level. Though on Friday it recovered a bit, but the effort by bulls was pretty meager. So the question now is, can the markets go down lower? Uh, the point here is that from September onwards, where there was a big in the first week or so, there was a big red candle. I have been telling that markets are becoming bearish, and now it is definitely trending lower, and it has broken the on a weekly chart also. It has broken to the 20 EMA and now heading towards the 50 EMA, which is roughly the level which people are talking about, 18600, 18700 levels. If you see, it has constantly traded above the 20 EMA since March onward. So now there is a slightly a big change in the trend, and the this weekly red candle was pretty big. Now, if you see, uh, again, the rise from March onwards, if you see this rally, which started from 16,800 to 20,200, it has corrected to roughly 61.8% retracement. That is generally the first halt. It can bounce back from here, or it can go to 50% retracement also. So that level corresponds to around same 18 to 520 or 550 levels. So that is a possibility because the fall last week was pretty big. Now let's see the Nifty daily charts. uh, if you see, this gaps on the way up have been generally being covered, and last week Nifty took beautifully support at 200 EMA and then bounced back on Friday. But this fall from this 19800 level to 18800 level in just seven candles, and the last three are big red candles, has been big, and 1,000 points going in a week is not a small fall. So people have to be careful and not just get carried away on every rally, because people will now use the rallies to lighten up their position. Uh, Now, if you see this latest fall, the latest fall which has taken place from 20,200 levels to now, the possibility of in the short term, the rise is possibly up to 38.82% retracement level, that is 19,360, or maximum to 50% retracement level, that is 19 to 525. So watch for this 19,400 to 19,500 levels for first level of rise, and that 19500 level corresponds to 50 EMA, which will pose as a resistance now on the upside. But small short covering and other issues are possible because FIs are overall short on the market. And if the news flow becomes positive, then short covering from FIs is highly possible. Uh, and Nifty has fallen as much as the small cap index. So, which shows that basically that retail traders are unwilling to let go their longs, which have they have built up over the time in small caps and mid caps, and that is why the Friday's rally showed that the retail is very quick to get back into small and mid caps name when the market revived on Friday. So November should be a better month, but look to only buy on big dips only. Now let's see the Nifty option chain. The maximum open interest is at 19,200, and that is on the call side, and on the put side at 19,000. That means, and if you see in the money, writing is pretty less, so people are slightly scared. So hence people are not taking very strong positions, and there are put writing at 18,900 and 18,800 levels, and very limited call writing, but maximum call writing is at again at 19,500 level. So these are the generally the levels to be careful about. The put call ratio is roughly around 0.85, so it is not oversold as such. It had become oversold during the week, but then people have closed their positions on the call side, so okay. But there is not much of writing which is taking place right now. Now, the major reason for the fall is Reliance. Now, it has had a major downward trending line, and it is below its 200 EMA, which is 2330. So and it had a bounce after the it reached to around 2230 odd levels on Friday. It went to around 2260 level. The results are decent, though Geo is a problem because it hasn't shown any growth, only good subscriber numbers, but there are a lot of capex and all which is required. So one has to be careful, and I think this 2330 would be a big resistance. So let's see on Monday how it plays out, the Reliance issue, because that is one which will drive the market. Nifty Bank, this is the weekly chart. So it is now coming down to its 100 and 200 EMAs. So the 100 EMA is around 40,500 and it is trending towards that. It had a weak session and it has broken most of the supports. So be careful of these levels, but these 40,000 odd levels would be good levels to buy those bank Bs and other stocks. The daily chart, if you see, of Nifty Bank, it has closed below its 200-day moving averages, which was at 23,250 odd, and it is a very weak chart. Even if you see, Nifty is still above the 200 EMA, but this one is below that, and one has to be careful with Nifty Bank. Why? Because the two of the major ingredients of the Nifty Bank, one is HDFC Bank. It is much below its 200-day moving average, and it broke down during last week, and it has reached to around 1450 levels, and there is no guarantee this level will also hold because FI selling is just selling off this stock, and it had those big red candles during the week. So it is not giving any kind of support or support to the market as such, or the bank Nifty. The other weakness is because of ICICI Bank. ICICI Bank has again broken the 200 EMA despite good results. So, which was very surprising, and it went and tested the 900 odd levels here, and it bounced back from there. So, in first it has to cross the 200 EMA, and then the 100 EMA to show some strength. Though it is making those lower lows and lower highs after making a top of around 1000 plus in the month of July, August. So these are the two stocks which are dragging the bank Nifty. PSU Bank again, if you see this daily chart, it rose, and after that it has started correcting, and it tested the 50% retracement levels, and I had bought out last week also that it may go to 50% retracement, and it exactly went there, and then on Thursday, and then has corrected, and it has crossed that 61% retracement level because of strength in all the major SBI, Canara Bank, BOB, etc. on Friday. So this has to be watched and depends on interest. How the results will be there, and how much is the interest now of the retail in PSU banks. SBI, as I was pointing out, it has broken that. It broke that long-term support of around 550, and it broke below that. It is trading below its 200 EMA. So if you see, if the all the three big bank stocks are below their 200 EMA, then how is the bank Nifty supposed to have strength? Though it bounced back, but that could be because of short covering to around 560 levels on Friday. Nifty PSC Public Sector Enterprises, which was a strong sector and trading continuously above its 200-day EMA, has now corrected and has come below the on Thursday it went below the 50 EMA, but then bounced back on Friday. So in case you're looking to get these, better is to buy them at their supports, that is 50 EMA or 100 EMA or 200 EMA, whichever is that stock closer to. IT index again, now it is showing distinct weakness. It is below the upper trend line, and it has broken down from there, and it may go and test out this 100 EMA at around 29,500, and it is looking weak right now because the results or guidance is not very encouraging for most of the IT stocks. The BSE Momentum Index, which is a clear signal of movement of stocks, has also gone weak and has tested the 200 EMA, went below that last week, and though it bounced back from there. So this is what I was pointing out. Every time it corrects on a weekly chart, it goes below the 50 EMA. So, in case all these momentum stocks you have to get in, you have to let this go below the 50 EMA, and then again the market bounces back with momentum. There is no point catching falling knives right now because they're all very expensive stocks and they have moved up a lot. Midcap index, again, similar thing. It is showing weakness. It showed some big red candles during the week. It bounced back from the 100 EMA now, and it is trading clearly below the 50 EMA. So it bounced back from 100 EMA, tested that on Thursday, and bounced back from there. And we'll have to see where it goes. But the momentum and the strength, as I had brought out here also, in the first week of September, or when it broke that uh, and broke the momentum, I had brought out that time also that this is now looking weak, and it has been having that lower lows and lower highs after that. Similarly, is with small cap index. It tested the 100 EMA. It had a huge red candle. It just went through that, crossed the 50 EMA and went down below that, and it has bounced back from there. So now it is now resting at 50 EMA, and we'll have to see how the momentum and other things play out. We'll have to see if the reaction to all these global events and other issues is done or not done. uh, Rally can take place, but as I told you, first the broader market should recover, and there should be a kind of a confirmation that it will not go to fall further. If it is likely to fall further, then the small cap, mid caps, and every other part of the market will also correct. This is the auto index. Again, here it was the index which was looking strong, but again it went and took support at 50 EMA. So every indexes have, if you see over a period of last few days, has gone to their supports and then have bounced back from there. So we'll have to just see them and just not buy them at any levels. Now there are few stocks I will cover today. One of the good results this time was Shriram Finance. This is one of the biggest retail NBFC offering credit solutions for commercial vehicles, two-wheeler loans, car loans, home loans, gold loans, personal and small business loans. They reported strong disbursement growth of 31% year on year and 13.6% Q on Q to 346 billion. 1 bill rupees 346 billion. 1 billion is roughly 100 crores. So even multiplied by 100, 346,000 or 34,600 crore was their disbursement. Their AUM has reached 2.03 trillion. A trillion is 1 lakh crore. So roughly 2 lakh crore is their AUM right now, up 19.6% year on year and 4.9% Q on Q. Net interest income, operating profit, and earnings were up 6%, 10%, and 4%, all ahead of estimates. NIMS expanded by 60 basis points Q on Q to 8.9%, driven by change in AUM mix in favor of high yielding products, rundown of excess balance sheet liquidity, and some decrease in cost of funds. Improved NIMS supported the net interest income growth of 21.6% year on year and 9.4% Q on Q. OPEX, operating expenses, was controlled despite 5,000 plus manpower addition. So if you see, this is their second quarter results. This is in millions, so this is roughly 4594 crore rupees. So there is a 21% growth, and Q on Q, the growth is around 9.4%, and profit has grown year on year by 12% and Q on Q by 4.5%. This is showing the AUM growth. The asset book is good. GNPA have gross NPAs have dropped to 5.8% from 6.3%. ROA has improved. Return on asset is around 3.3%, which is healthy, and year on year improvement is around 5%. ROE is around 15.4 levels, which is again better than first quarter, which was 15.2. And price to book, if you see, is relatively cheap. I'll show you subsequently. It is much cheaper than its peers. Uh, this stock pre-provision operating profit is up also 16.3% year on year and 11% Q on Q. So this they are a leader in high yielding used CV financing, especially in the second and third tier towns and villages. That second the used CV financing is a big yielding segment because the spread is very high, and two wheeler segment. They are expanding into housing finance business. And if you see here, if they can maintain this 3% ROA and around 16% ROE, so their profits will keep growing. Now, if you see the valuation, it is 1.5 times book, which is very attractive. I'll show you subsequently. So, if you see here, this is their ratios. So, all ratios are growing. Uh, it grew around 46% last year, and this year expected to grow around 20%. As the size will increase, the growth rates will stop or will slow down. Uh, PAT is expected to grow around 16 double digit growth. Yields are expected to be yields on advances are pretty high, 16 to 18%. Cost of funds is around 8%. So the NIMS on balance sheet loans is around 10%. 10% NIM is very good. So in case they are able to keep growing and they maintain these NIMs and NPS, their asset quality, then this stock will get re-rated. So ROA, ROE, etc. strong. Now this is one of the SOTP methodology to value Shriram Finance. Somebody has done this. Now they have valued it at around 2400. Presently, I think this stock is around at around 1800. So there is a huge upside which is possible on this stock. This is the comparative valuation with its peers. So if you see, Chola is at 4.6 times adjusted price to book of FY25. Mahindra Finance is 2, Sundaram Finance is 3.4, and this Shriram Finance is just at around 1.5. So there's a huge scope for re-rating, and I think this is what has happened. So the stock took off on Friday after the results. It had come down to its 100 EMA, which was around at 1770 odd. But there was a gap up, and on Friday it went up and it closed at around 1930 odd. But there is a huge scope because there is a lot of growth and good valuations are very attractive for this stock. Next one is Voltamp Transformers. This is a Baroda-based company. It has installed facility to manufacture oil-filled power and distribution transformers up to 160 MVA, 220 kV class resin impregnated dry type transformers up to 5 MVA, 11 kV class in technical collaboration with MORA Germany, and cast resin dry type transformers up to 12.5 MVA, 33 kV class in technical collaboration with HTT Germany. They reported strong numbers in Q2 FY24 with EBITDA growth of 48% year on year to roughly 68 crore, that is 688 million rupees. led by 20% year-on-year revenue growth and a healthy EBITDA margin of 18%, which improved by around 343, that is roughly 3.5% year-on-year. Profit grew 49% year-on-year to 68 odd crore. Order book at end of Q2 stood at around 840 crores. It has constantly enjoyed the debt-free status, which indicates its strong focus on better working capital management. It will benefit from pickup in power distribution capex and investment in manufacturing space. So let's see the quarterly financials. 20% growth in revenue year on year and 18% growth Q on Q. EBITDA again grew 48% and Q on Q it grew 43%. So actually this quarter was very good. EBITDA margins are strong at 18%. I don't know whether they can maintain these ratios for the next quarter or all. PAT grew 40% and year on year 22%. Adjusted PAT grew 49%. EPS grew around 49%. And if you see the FY23 EPS is around 185, which grew around 41% from FY22. Now, for projected profit and loss, they are projected to, this is again in million, so they are projected to do roughly 1800 crore or revenue in FY26, and EBITDA is expected to be around 300 crores. Margins are remaining steady at around 16 to 17%, and they are going to maintain their profit growth and PAT growth. So this strong stock, and if you see the ratios, reported EPS for if FY25 is around 250. So 250, you can give it 20 to 23 EPS, so it can easily be valued at 5,000 rupees to 5,775 odd, 750 odd. The net sales are expected to keep steady and grow at around 8 to 10%. Similarly, the EPS growth is around the same. Valuations have come down, so to below 20%, but in case they are able to show this kind of a growth, this stock requires to be re-rated. Profit margins are steady and they are maintaining that same 26 odd percent. EBITDA margins are strong. There is zero debt. This is the key issue uh, for this stock. Net profit margins are good. They maintain good ROC and ROE, which is roughly 18 to 19%. Return on invested capital is again same 20%. And so all these receivable days are reducing, payable days are zero because they are net debt company, net zero debt company. Now, if you see the this stock on the technical charts, it corrected from that from 5,000 around 5,800 odd levels and stabilized to around 4,250 levels. And now, on the last 2 days after the results, it has gone now to roughly 5,000 levels. I'll tell you the reason also. Uh, in the September quarters, the promoters have reduced their holding from 50% to 38%. So, if you remember, in August and September, most of the promoters were selling their stake and booking profits. So, they sold off 12% of their stake in this business, and two FIs and DIs have increased holding. So promoters got around roughly 4,600. They sold at around 4,633 the stake and got around 500 600 crore for selling their stake. So this was the reason why the stock corrected, because on impending stake sale from the promoters. So this one has to see this over a period of time, because why should, if a business is doing so well, a promoter should sell 12% of the stake? I couldn't find the reason for reason for the promoters to sell their stake, other than maybe just normal profit booking, because the stock has, if you see, has from March levels, it had it had nearly doubled. So it must be that normal profit booking. The next stock which I'm going to cover is Canara Bank. Canara Bank reported a healthy quarter with PAT up 43% to rupees 36.1 billion, which was in line. 1 billion is 100 crores. So that is one, driven by lower provisions. Net interest income grew 20% year on year in line, while margins moderated 5 basis points to around, that is NIMS to around 3, which is decent. On the business front, loan book grew 13% year on year, 4% Q on Q, driven by healthy traction in retail and corporate loans. Deposit grew 9% year on year, 3% Q on Q to 12.3 trillion. 1 trillion is 1 lakh crore, so roughly 12 lakh crore, led by 11% year-on-year growth in term deposits, which is good because that's a long-term money. But the CASA ratios dropped. Asset quality ratios have improved, and the management expects to further reduce net NPS at an accelerated pace. And this was the reason why the stock took off. So I had warned on the group also that the results are good, and then from that moment the stock took off after the results came, because the market became assured that NIMs are not dropping too much. They were expecting further drop in NIMs, and asset quality is good. So if you see the quarterly results, the net, this is in billions, net interest income grew year on year around 20% and 3% Q on Q. Other income and all that, operating profits grew around 13%. Provisions have decreased. Profit before tax is up 53%, and profit after tax is up around 43%, 36.1 billion. That is roughly around 3600 crores. Balance sheet is decent, and the, if you see, the gross NPS and net NPS have declined by 16 and 27%, which is very good. Though the slippages have increased Q on Q, but have declined year on year by around 19%. Hence, the stock was immediately stock shot up. Now, if you see here, uh, the percentage wise, the asset quality is improving, and ROA is roughly around at 1, and ROE is around 22%. So the yields on loans is around 8.6%, yield on investment is around 6.9, yield on funds is 7.3, cost of funds is around 4.9. So that's why the NIMs are at around 3. Margins, that is why the NIMs or margins are around 3 here. CASA, as I brought out, has been declining. It has reached 32 odd level. So that is a sore point, but as it is, because of higher interest rates, people are putting in more deposits, so CASA ratios will fall. Now, they are, and this is in billion, they are projected to maintain their names at around this 2.7 or 3 levels. EPS is expected to grow to around 80 to 92. With the EPS growth is going to be good even this year, and next year is going to be normal. Book value is roughly 459, and adjusted book value is 409. So if you see, this stock is trading below its book value here. If you see, the banks are basically rated on book values. So the price to book, it is still below 1. Hence, this was the reason why the stock just shot up on Thursday. And if you see the loan book growth, it is stable to, it has come down to around 13%. It grew up to 21%, but it has not reached this 13 odd percent level. And deposit growth is also steady around 8-9%. And in case they are able to maintain their asset quality with these kind of things, it's decent for them. Now, if you see here, the technical chart, it had fallen to its 100 EMA of around 343 on Thursday, and when the results came, it just shot up, immediately went across the 50 EMA, and now it is actually went to the all-time high. on Friday, and then it closed at around 380 odd levels. But if you see book value at around 450 or adjusted book value at 400, it can these stocks can easily trade with the kind of stability they have at around at least one time book value. So hence it can go up to around 400 plus to 450 levels in this momentum or over a long term. The profit is growing because there are lower provisions. So, and in case the NIMs remain and ROE is good, 20 odd percent, they will keep remaining profitable unless they actually again start the bad lending and all that. So, these books are clean and these stocks are uh, can be re-rated now. So, I have finished. We will take questions now.